Hey guys, it's Mandeep. So I'm doing yet another video, and I'm going to accumulate a lot of the explanations I've done in the prior videos in this one video, to cover the ultimate trading signal. Now, I know I've covered this individually with all of you who have this signal, but I'm going to do a recap once again, and I'll emphasize some key points for you, right? Because as far as I see, the trading signal generates about 80 to 9% success, right? So I know the reason why some of you guys see less, because you deviate from the actual strategy, right? What you don't do is you don't follow the stocks from the list. You've got your own favorite stocks and you try and trade out of that. Now, these lists can be automatically adjusted, right? If you like trading penny stocks, right? All you have to do is open up the list, these dynamic lists, and change the price range from, let's say, 30 cents to $2, right? Leaving rest of the criteria the same, right? This way it'll give you stocks that, are in that range, but meet the rest of the criteria. And the reason that criteria is there, because it matches closely with the underlying code of the ultimate trading strategy that we have, right? So this is the setup that you guys have. Again, there would be minor differences between yours and mine, because I keep making some changes and keep experimenting with new things, but by and large this is the setup that you have. So let's go through this setup, starting from the top bar. So what I display at the top is the market breadth, right? This is the NYSE market breadth, which says when it is 1.5 to 1, which means for every one stock declining, 1.5 are advancing, and likewise the setup for NASDAQ. And I've explained before, right? Whenever this ratio is, about less than 2 to 1, that means it's a neutral market, right? For a trending market, which means market moving significantly, either up or down, you would see this to be 3 to 1, 4 to 1, 8 to 1, right? Even higher sometimes. The market thrust is a way to calculate by looking at four different parameters. It looks at the advancing issues, it looks at the declining issues, and it looks at volume flowing in advancing issues and the volume flowing in declining issues, right? Based on that, it makes this calculation. When this is positive, it means there are more issues that are, advancing, and this thrust is also positive when more volume is flowing in the issues that are advancing, okay? And the two styles of trading that we have. We have an aggressive trading style and we have a conservative trading style. And I'll go through the difference of that in a minute. And this will give you three options. It'll give you long if the stock or the trigger is long. It'll give you no trade if it's in a neutral state, or it'll give you short. We don't have a binary state of either long or short. We have this period where a trade will close and it could move in the sideways direction for some significant amount of time, which means there's no trade that needs to be taken. And this will show you, once the trade is live, how much profit have you attained on that trade, okay? Now, let's go and take a look at each of these. I will not go through the code, but I will tell you what these are, right? This brownish line is the moving average adaptive. This is a standard moving average that's available inside of TOS code. That's what I display here. The one at the bottom is a volatility-based trading system, right? So it looks at ATR and a few other things, and in essence, all that you guys need to know is that when it is over the pink bar, right, it's actually trending in a positive way, and when it is below, that's when you need to be careful, okay? And this is only for a visual representation. I'll show this to you at the end. There is absolutely no need to even have this, because all of this is actually incorporated in the code. Now we have here, which is the Ichimoku cloud, right? For those of you who don't know, you got to read it up, right? Take a look at Google and read about the Ichimoku cloud. But what suffices for this discussion is the following. When a stock is trading above the Ichimoku cloud, it's considered to be trending in the positive direction. When it is inside the cloud, it's neutral. And when it is below the cloud, it is bearish. And what I do is I actually look at multiple time frames to ascertain whether a stock is above or below. So that's actually determined by this indicator, right? So this is an indicator that's looking at 4 time frames. So the top one here, this top line, is always aligning with the current time frame of the chart. This is 30 minutes. This is 30. The next one is the hour. this is 4 hours, and this is day, right? And if you're trading on a 10 minute, then it'll give you 20, 30 an hour, right? If you're trading on a day, it'll give you day, 2 day, 3 day, week. If you're trading on the hour, it'll give you hour, 4 hour, day, and the week. And if you go and open the code, right, it'll actually show you, once you choose a time frame, what the next three higher time frames are. Okay, so there's you don't need to read code on this. It's fairly straightforward in English, right, what those next time frames are. So if you want to trade at 5, it'll show you what the next 4 time frames are. So by actually getting a confirmation, right, we are putting the probability in our favor. This is exactly the same thing, but for MACD. So 4 time frames. We're trying to get confirmation from more than one. Okay. Next, we have something called momentum A to C. What this means is it's looking at the moving average of 8 open and 8 close, right? So if a stock opens and then, always closes higher, then the average of 8 close will be greater than the average of 8 open. So that's positive. And this histogram is positive, which means 8 close is higher than 8 open, right? Here's the TTM squeeze. I just put this in. You don't need this, right? Because it's all incorporated in the code. So whenever you're in a squeeze mode, something like this, that means the stock is actually in a low volatility period, moving sideways, and you do not need to take any trade. Again, I emphasize, you do not need to worry about it because it's all incorporated in the code. You will never see a trade when this is actually in a squeeze mode. Now, what else do I look at? I look at this buying selling pressure. I'm not going to go into the details of the code, but suffice to say, when it's green, the buyers are in control. When it's red, right, the sellers are in control. Now, as you can see, it just doesn't mean that just because it's red, that means the stock is actually dumping or you're going to sell it, right? Look, it's got sideways action. Now here you have a bigger momentum because this is actually rising all along, right? So you can pay attention to this. Is this incorporated in the code? Yes, right? So, and the code is also looking at other things. It's looking at a slew of moving averages, right? And it's making sure it's above all of those moving averages, right? So it uses a combination of all of those parameters to come up with a buying decision. And likewise, there is a decision of how to close a trade, right? So it just doesn't look at, yeah, it fell below the yellow line. It looks at a combination of a couple other things, right? Why? Because that's how you get the best sell. Now, one of the things you guys need to learn, if you get a buy and you have a win here, this is an example of 11 bucks profit. Am I going to wait for a close? Absolutely not. I am going to keep raising the stop, right? Or I'm going to take a profit at a certain point in time. So this is what you need to know. Do not let a winning trade turn into a losing trade, right? So that's pretty much what the system is. I don't know, why you guys, I mean, if you guys want to look at other things like RSI or, stochastics or whatever else in conjunction, that's certainly, something that you should do, right? What do I do personally? I don't look at any of that stuff, right? Because I have realized that that's not, important at all because I have enough checks and balances inside the code, right, to make a fairly objective decision of when to go long and when to go short, right? And the reason is I've tested it over multiple time frames, etc. Now, what do I use from a time frame perspective? I like using 30-minute, right? Now, if you guys are experienced enough to be consider yourself as day traders and want to trade in 5 minute, I'd say good luck, right? First, learn how to trade on higher time frames, on the day time frame, a 30-minute time frame, and once you become comfortable with that, then drill down into shorter time frames like 5 minute or 1 minute, etc. Even after years of trading, I don't trade on the 1 minute chart or the 5 minute chart because personally for me, I think you get too many whipsaws. But with this, something like this, right? So this trade is open. You get 1, 2, 3, 4, 5, 6, 7, 8, and 9 days. In 9 days of trading, you're making 11 bucks, which means roughly a buck a day, right? I mean, that's a lot of profit, right? Now, let's move on to the list, right? I gave you two trading lists. In fact, I gave you four, right? So this is the TC long, and this is your day trading list, right? So this is predicated more on longer term. What it's looking at is it's looking at your Ichimoku cloud to be, up on the day, 2 day, 3 day, up to the week, right? So if it is also good on shorter time frames, that means you can take the trade on on that particular time frame, because all the time frames higher than this are good. Now, I want to show you what the success rate is of this, right? So whenever things are in the list, right, you can take it. But one of the things that I do, I don't just take one trade, right? Because it's entirely possible that's the only trade that might turn out not to be so good. So I end up taking multiple trades in this, right? So I know at least three to, if I take five, I'm reasonably confident at least 3 out of 5 will work out well. Two may have some short term, may have some losses, but the three that will do well will actually give you a lot of money, right? So we're going to go through each one of them, right, just to give you a sense, and just to let you know there's a reason I gave you this list, and there's a reason you need to follow these lists versus going on a tangent and just trading whatever you like, right? So if you go through this list, it gives you a higher probability trade. Now, so let's go through each one of them, all right? So again, this is alarm, right? So this gave a trigger. This is the last place where it gave a trigger. This is the aggressive mode, and I'll talk about the um, conservative mode in a little bit, right? So whenever this trade initiated, it has a profit of $4.52. I mean, would I let this turn into a losing trade? No, right? Will I wait for a close? No, I will take it much earlier. If I'm not in this trade, but I'm just giving you, or citing example that you would take this trade off or raise your stop loss on this trade. It's up $4.52. Look at PANW. The trade was initiated like 1, 2, 3, 4 days ago. $5 in profit. Let's look at RMD. It's got $1.73 in profit. Let's look at VeriSign. And this is exactly the same list that all of you guys have, right? So it's up $4.53. Let's look at Keys. Uh, it's profitable by $8, right? So the next one, LPLA, 774. NVCR 1182. So I mean, I haven't totaled it up, but I bet it's at least $30 in profit in like 4 or 5 days just using this list. And again, as I said, you can select more than one. Now let's just move down to the day trading list. Okay, so this one I did calculate what the profit is, and I'm going to show it to you as well. This is a trade that just got triggered today. It was in the list, $1.73 in profit. Let's look at Beat. I actually took this trade. $2.67 in profit. I took it today, but this was initiated a day before. COO has a profit of $11.56 in 1, 2, 3 days, 3.5 days. Domo has a profit of $3.57 from the list. FGEN, it's up $3. GDS Holding, it's up $6. Keys, again, I think it was on the other list as well, $8 in profit. LEA, 65 cents in profit, triggered today. LPLA, this was a trade I was in today. Profit of $7.74, although the buy's been there for a while. NEWR, $2. NTES, $3.39. NVCR, $11.82. OSK, 10 cents. It's still in the trade. Now PB, $1.96, right? PTLA, $6.46. SBAC, dollar in profit. SGMS, 171. Sharp, $8. Tandem, $1.40. TPX, $6.40. WGO, $3.25 since the trade was initiated. WLTW, $3.02. And YY, 130. So if you total all of this up, right, just these set of stocks, the total profit in this is $90, right? And I mean, even if you took like a handful of trades in this, you would be making, a boatload of money. Okay. So now let's take a look at what this aggressive strategy is. Now, what I do in the difference between the aggressive strategy and the conservative strategy. In the aggressive strategy, I want at least the minimum time frame to be actually true, right? So as long as the first time frame is true, and then a lot of the other criteria is met, I can initiate a trade. Now, if I want to wait and be a little bit more conservative, then I'm going to wait for all of these time frames to be aligned before I take a trade. And that's your aggressive conservative strategy. So if you go back and drill down from aggressive into conservative, you will see the only time the trades will get initiated is when all the criteria is met plus your Ichimoku cloud is true on 4 time frames, right? So it's going to initiate the trade right here, right? Because everything is aligned here. So, or in this case, the last trade is here, right? I mean, obviously these were aligned, but the other criteria was not met. So it took a trade here. So this is going to be true for all of them. So that's the difference between trading in the aggressive mode and trading in the conservative mode. The aggressive mode will give you more trades. Obviously, you're assuming a little bit more risk. The conservative trade will give you lesser trades and you're assuming less risk. Right here is an example. So these 4 got aligned. The rest of them, you don't need to worry about it. Looks at, you got a trade here. Let's look at LPLA and let it paint. So it's still, got triggered much earlier. It got triggered here. Everything was aligned here, right? It took a trade while the other criteria was met, right? So as you can see, again, I can't, I'm emphasizing it again. Pay attention to these lists, right? If you want a different price range, let me know, right? Because if you're going to use a penny price range, then you can't trade, stocks with an ATR of $1.47 or above, right? I mean, you will have to eliminate the ATR condition from the strategy that I have to create these dynamic lists. Now, what is the reason for selecting? These are the most liquid stocks, right? They have an ATR of $1.40, which means between the high and the low of the day, it'll move $1.40. It also has an average moving average volume of at least 600,000. So these, move significantly as well. So if you're trading, in a different price range, let me know and I'll adjust these things for you. But the end result is going to be exactly the same, right? So focusing on the list is going to give you the highest probability trades. Let's look at Amazon from yesterday. I mean, as I said, I mostly take it out of the list, but there are times that I find, it makes sense. Why did Amazon not trigger a trade of this at all on the conservative mode? Because all of these are not aligned, so you got no trade for a while, right? But if I go into the aggressive mode here, you will see a trade on this, right? Let's go into the aggressive mode. Click OK. And you have a trade here, which is exactly where I took the trade yesterday. Now, I explained to you why I took this trade off here, right? Because there was clearly some resistance here around the 1705 area, and that's why I took the trade off. It was moving in a sideways direction. I had enough profit of $66. Here's another trade that happened on Amazon. This was profitable as well. I mean, we can drill down and see what are all the trades you took. So, you had 3 trades of this, 13, if you took 100 stocks and traded this strategy, 13,500, 3,400, and 8,000 for a net profit of 25 grand. So you need to run this strategy on the stocks that you are trading and see how well it has performed and which time frame has worked the best, right? Just saying this again, there is no holy grail, right? But yet you will show me another system that will produce this kind of results, right? Most of them will give you, 40-50% profit, right? This one is generating 8 out of 10 good trades, right? At the minimum, right? So you just have to stick to a plan, right? You just need to follow what the rules that I give you. There's a reason I generate these dynamic lists and emphasize when I'm, trading you one-on-one to stick to these lists. You see the best results. And I just demonstrated that to you. And we can look at this list over and over again. Come tomorrow, day after, whatever. Just tell me. We'll go through this list again and you will find similar winners, right? So anyway, go ahead and post your questions in the room. And if there's anything that I can help you with, as always, just let me know. Okay? I'll talk to you soon.